Hey, what's going on, everybody? All right. Check out the ES. Check out the S&P today. Everything is moving up. Let's get our... Oh, my scanner is gone. What happened here? Oh, there it is. I've got the scanner set here. I'll just wait for some people to get into the room before we start. Scanner is set up 1 hour and 4 hour. We're looking at the 1 hour trend. 1 hour trend and the 4 hour momentum filter. That is what we're looking at right now. If you guys have any questions, just put them into the chat. Look at that rejection candle there. You can see the S&P has gone sideways, completely sideways. On that 15-minute chart, what do we do? What do we do in this situation? What do we do in this situation? You're high on the curve, right? And when I say the curve, I mean the market edge. Okay, I'm talking about the market edge on the highest time frame that you're using. Market edge on that highest time frame that you're using. Strong Q1 gains may have the bulls charging through 2024. I love these. These news articles. They have very creative. They have very creative titles. Hey, Frank. Good morning. Good to see you. We're looking at news articles here. So where everything is pretty much to the upside here. We are looking at a booming bull market. Although, take a look at your scanning system, and you can see that we do have quite a bit to the downside here. Even we have more contracts to the downside than we do to the upside, but yet the news, because the news is a crystal ball, right? The news is saying that everything is up. But what we see is we do have, we do have some contracts that are up. The S&P, the Dow, the Russell, crude oil, gold, silver, those are up. But look at everything that's down. Okay. The NASDAQ is down. Let's take a look at the NASDAQ. Micro NASDAQ. Yikes. Sideways. Downward trend. Let's get rid of all that. That doesn't mean anything anymore. Classical charting pattern here. You can simply draw that trend line, right? Where does the trend line hit the majority of times, right? Put it right at the base of that, of each candle there. Little bit of a false breakout here, right? Nothing's perfect, but you can draw a line And then you can see the trend line resistance levels, right? And you can draw another line like this. And you can see that all those support levels, right? So the way you would draw out your channel here, you see how it's not perfect? Like, that's where engineers and programmers and mathematicians and people who use math every day, in their work environment, they're not going to like that. They don't like the look of that thing, right? Frank uses math every day, as a tool and die maker, working on a lathe or something, or a milling machine. You use math every day, and you have to get stuff perfect. You have to get stuff perfect. That throws a monkey wrench into your trading mindset, because you're looking for this stuff to be perfect. And what happens is, and that's not a bad thing. You just have to know how to control it and apply it in certain environments, right? So, if you're working a lathe or a milling machine or something like that, you've got to be exact. If a structural engineer is building a bridge, and his calculations are off, the bridge falls down, right? So in trading, it's not like that, right? So, but if you are one of those individuals, you just desperately try to make this thing as perfect as possible, and sometimes you just can't, and it messes you up. It totally messes you up in the head. So you have to think more in terms of zones. You have to think more in terms of zones, like maybe this, right? How about that? You can think more in terms of zones. And that might be a bit more comforting. You'd have to draw that zone like that, but you can do stuff like that. You can be creative. You just have to get creative with your classical charting. Getting creative with classical charting. So I guess I just wanted to point out that nothing is exact. You can never say, oh, price is going to go to this line and then bounce off of it. That's the lesson here. You can get a general idea. All right, let's draw a trend line here. That's pretty good. All right, so here's all your trend line resistance levels, right? Resistance. We get it, right? So that's where it's at. When you have a break, like we got a little false breakout here, I'm sure people looked at this, had everything drawn like this, right? False breakout. It even broke above that trend line and closed above the trend line. Right here. These two candles closed above the trend line. So we figured there was going to be some sort of trend line support right, in this area, maybe at this you know, maybe at this zone here, at this demand zone, price pulled in and ripped right through it and then found resistance again. No telling, right? There's no telling. So nothing's perfect. All right, so let's read this chart. 4-hour chart, right? Trend is still up. The trend is still up. We're hitting that resistance level. Cycling up, momentum is up, but yet we keep making lower highs. I'm sorry, we keep making lower highs too. Here's your high. Here's a lower high, lower high, lower high, lower high. Here's your low, lower low. This one kind of in the middle, lower low. So we're making these lower highs and lower lows. How long will that continue? We don't know. But we've got a trend line here that's hitting resistance levels. If you look at it on the chart below that, you start to zoom in on this, this process here of higher highs, of lower highs and lower lows. We've got momentum just starting, right? It looks like it really wants to break above positive 100 on your CCI, but yet it keeps going down. So we keep going down, and momentum is starting to break to the upside. So we could get a momentum shift here, a complete momentum shift here. We have it on the high time frame. Momentum is up on the high time frame, but yet we keep going down. But momentum keeps going up. Those are two opposing forces. Those are two opposing forces. And when you have two opposing forces, fighting for position, fighting for dominance, is it going to be trend or is it going to be momentum? That's when you start getting these squished looking trend clouds, and consolidation, or that sideways movement. And we can see that on the lowest time frame. All right, let's get rid of all this. Recalculate the chart. And I'll show you right there. So the high time frame, trend and momentum are opposite. The middle time frame, trend and momentum are pretty much opposite, right? Getting there. What does that give us? Gives us this sideways movement here. Interesting when you look back in time, a lot of time is spent in this area. A lot of time spent in this area. And just making that observation, you can pretty much say, well, why don't we wait for a breakout of this, why don't we wait for a breakout of this area here? And you would have to. So when price breaks out of this area that it seems to like to consolidate in, look what you're going to get. You're going to run into this, right? You're going to run right into that. and you're going to have to wait for a reaction, right? What happened the last time? Big reaction, right? So with momentum, if we could get back up to here with all that momentum to the downside on that middle time frame, right? We still have momentum to the downside until we cross positive 100. We might get a very forceful reaction out of this. And it looks like we won't have any other element involved. We won't have any other element. We won't have momentum involved. We won't have trend involved. Okay, so those are our two key main elements, right? Momentum and trend across multiple time frames. Those are three elements that we really want to be involved with in any trade, in any trade. So when you're looking at a chart and you're seeing this amazing looking supply zone, I mean, on the 15-minute chart, was it the 15? Yeah, I mean, look at the reaction out of this supply zone. Look at the reaction out of this supply zone. Voosh, look at that. Okay. Was this supply zone caused by news? Because if it was, it doesn't make it as strong. But look at all of the levels that it broke. So you have to ask yourself, my goodness, do I set the trade up right here? They do that at Online Trading Academy, no matter what. They're like, go for it. What have we found? What have we found out using TrendCloud? What have we found out? We found out that when you pull back into a supply zone, or when you are approaching a supply zone, but the trend is up on the high time frame, and by the time this gets to this supply zone, price is going to be above our trend cloud, fighting for an upward position. So when you pull into a supply zone against the trend and against momentum, do we really want to be a part of that? I don't care what that looks like. Yeah, it looks like there was a huge reaction out of it. But that's only one thing. That's only one observation. That's only one observation. And I think that's where Online Trading Academy fails miserably. I think that's where Online Trading Academy literally fails miserably. They fail their students miserably by taking that approach. Now, this thing could work, right? And I'll look like a jerk for saying that. And don't get me wrong, I love that school, okay? But, we have to, as, scientists rip each other's theories apart all the time, don't they? Anybody in like higher academic, you should see these PhD guys go at it. They hate each other. It's amazing. All I'm saying is that in my experience, pulling back into a supply zone just because it's a supply zone is a terrible theory. It's an absolutely terrible theory to pull back into a supply zone just because it's a supply zone and take the trade. I think that's a terrible theory. I think that you need to have more involved in that trade plan. Okay. Otherwise, you're teaching students like, Trading Academy, Online Trading Academy is teaching students, see this here, this is a supply zone. This is where you take your trade short. And I just don't like that. And I think a lot of people got confused by that. They listen to what their instructor said, and you just hear terrible stories. they, lost everything or whatever. You have to get profitable in the simulator. You got to get profit. So as I was going through my simulated trading, sometimes this worked, sometimes it didn't. And I don't know if any of you are involved with like digital marketing, but I'm learning a lot about digital marketing, and it's very close to trading. You want to look at let's say you're posting a Facebook ad, right? Well, the formula for posting a Facebook ad to get the most out of that ad is that you have to make 3 or 4 ads. You have to run those ads for, at least 30 days. And you've got to see which ones performed best, which ad worked the best. And you say, the ad with, the writing in the middle of the ad and the picture on the side here, and this color, this orange color seemed to work the best. So then you take that information and you make more ads like the one that performed the best. And that's the process. Then you make another 3 or 4 ads. You go a little different route, and then you see how that performs. And you follow the same process. Which ad worked best? Oh, this one out of this campaign or this grouping of ads, this one performed the best. So now you've done it twice. Now you have more ads of the first campaign and more ads of the second campaign with the highest performing ads. But how did you know to make them that way? How did you know to make those ads specifically that way? The market told you. Your audience, the people told you. We like this ad. We clicked onto this ad more than this ad. And you have to look at those analytics. So when you're trading, you've got to look at your process, right? And you've got to take one piece of it and you have to analyze it, and you have to say, okay, supply zones that have this very intense reaction, we're gonna take those. We're only gonna take supply zones, that have one basing candle, right? Something that only has one basing candle and a fast and furious move out, right? Move out, breakout to the downside. We're only going to take those supply zones. Okay, great. Fantastic. Let's do that. Well, that's what I did. I did that at first too. And then I started noticing that when you take supply zones, even though they look good, when you take supply zones that are against that 1 hour trend and against the 1 hour momentum, they don't work as well. They do not work as well. And so what did I do? I stopped doing that, and I incorporated those components into the trade plan. So by the time this price gets into this zone, we're definitely that CCI is definitely going to be above. It's going to be above positive 100. Okay. By the time price gets into here, CCI will definitely be above positive 100. That negates this, right? That negates this zone. And we're in an uptrend, cycling up with momentum up on the highest time frame. Whoa. That is a powerful force, okay? That's a powerful force, okay? And also, so you'll be fighting against that. You'll also be fighting against the fact that price here, right? Let's say this is a red candle. price is going to be above your TrendCloud system. We don't want that. We don't want to take trades when price is above your TrendCloud system. We want to take trades in situations where it is below your TrendCloud. Okay? Like this, right? Price breaks above TrendCloud, pulls back, never breaks below your TrendCloud system, and then takes off, right? That's what you want to be a part of. Let's take a close look at this NASDAQ. Look at all this consolidation here. You can keep it like that, I think. I mean, actually, on the 1 hour chart here, here's your low, here's your high, and all of this is kind of in the middle. That's all pretty much in the middle. So a little lesson there, and we always want to go over what is the trade plan, right? What is the trade plan? And focus on that. I was talking to a few TrendCloud members, and they were struggling with being consistently profitable, and that's the whole deal, right? That's the whole reason we're using this system. In order to be consistently profitable with any system, right? In order to be consistently profitable with any system, you've got to have those rules set. You've got to have those rules put in place, no matter what you do, right? No matter what your job is, you've got to have some rules put in place. And one of those rules that people seem to forget about, okay, one of those rules that people seem to forget about is the fact that when you pull into these supply and demand zones, you have to have trend and momentum on your side, and it's got to be across multiple time frames, right? Trend momentum across multiple time frames when you pull into those zones. That's it. Just focus on that. But can you just focus on that? What happens is people start taking any zone that they come across. Oh, there's a supply zone. Let's be involved with this. Even though you're in a downtrend and momentum is against you, they take the trade anyway because it just looks so good. That's just one observation. Can't really do that. All right, it's almost 9:30. It is almost 9:30. Let's get rid of all of this. All right. Put that TrendCloud back on there. Let's take a look at the gold market here. We changed over, didn't we? Let's go over to gold. GC. GC. Let's see, are we no longer on the J contract? That's interesting. No, not yet. Huh. Interesting. Look at how there's no volume in gold right now. What is going on? We're still on the J contract. We are on the J contract. Huh. Really not a good time to trade gold. Look at how low that volume is. We've got volume on, oh, look at that. Wait a second. Copper is on the K contract. Silver is on the K contract. Interesting. Gold is not yet on the K contract. The volume is still on J. So we must be transitioning. Whenever you see little mouse tracks like this, you got to stay away. Okay. So whether you're on the K or the J, K contract and J contract not looking good on gold. All right, let's go over to copper. Copper and silver. Let's take a look at that. That has the highest volume. High contract, high time frame, down. High time frame down. Cycling down. Momentum is down. We've got some bullish divergence here. Okay, we've got bullish divergence on copper, meaning as we are making lower lows and lower highs, look at all that bullish, divergence. So this is pulling down as momentum is ripping to the upside here. That's called bullish divergence, or MACD divergence. Okay. So the context of the trade is down, right? Trend down, momentum down. Middle time frame is sideways, right? We don't like that. That's going to throw a monkey wrench into everything that you do. So it's very frustrating when you go across, you're going down your list of commodities, and then you look at this stuff and you're like, but I don't see anything. Those days that's going to happen. There's nothing that you can do about that. And what happens is you start getting frustrated. You're like, I have to take a trade, or I have to trade today. You'll lose everything. So that was really one of the biggest reasons why I wanted to develop TrendCloud, so that everything was on the chart. I want to be able to look at the chart right away and say, this makes sense. You've got to look at your chart, and you've got to say, oh yeah, this is an opportunity. Oh, boom, this is an opportunity. And if you're questioning too much, if you're like, well, it kind of looks like this, it sort of looks good, forget it, walk away. And do you see how, look at oil keeps going up. Do you see how your trend cloud is, all the plus signs are kind of all in a row here? That is sideways action, and you just don't want to be a part of that. You'll get chopped up. That's what they call getting chopped up, and you will get chopped up. Downtrend looking good on that high time frame on copper, but that middle chart, it's just not there. It's just not there. 15-minute chart looks nice, right? 15-minute chart looks nice. What if you went 5-minute chart and 15-minute chart and 45? Start changing that up. You can zone in on a shorter move if you desperately need to trade for some reason. So here we're breaking to the downside. We've got momentum on our side now on the 15-minute chart. So this is going to be much quicker, right? Momentum is down, so we've got momentum. We've got the crossover. These three time frames are more in alignment with each other. So this is a lesson in, am I allowed to change my time frames? And look what I did. 5, 15, 45. Each time frame is 3 times bigger than the next time frame. In a momentum-based system, that's what you want to do. In any momentum-based system that you get yourself involved with, you want those time frames to be 3 times higher than the next, because the idea is to catch the timing of trend and momentum as they start to flow together. And that's what we are seeing here. So if we were going to set up a trade on copper, okay, we are getting a TrendCloud signal right here. But where is the, where's the target? Where is the target? This actually pulled back a little bit deeper. Look what happened here. Okay, on the target would be on your highest time frame. Let's draw it out. We're going to put a target right there. Okay, and we're going to try to get ourselves into a more of a scalping type of trade. Starting to hook down. We're liking that. Why is this the target? Because that's the body of the candle there. Okay, is it an ADR checkpoint? Oh, look at that. Look where we've got the ADR checkpoint, which is right there. Okay, beautiful. All right. But what do we have here? We've got this downward move, pulls back into TrendCloud, breaks through structure. Good. On the next pullback, that's what we want to be involved with. Let's see if we have anything on the opening range. Oh, look at that. Okay, so you can see on the opening range how we broke to the upside on this particular time frame here. And we have to use the 15-minute opening range. Sorry. Okay, so we broke to the upside on these 3 time frames. Downtrend, downtrend, momentum is down, but we broke to the upside. So this right here, we'd be looking for some sort of bull trap. And what would we have done? We would have had something like this, right? It did break through it a little bit, complete rejection. Maybe we got stopped out, and then we get back in on this candle here. All right, so we do have, we could try to get in on this right here for a scalp, right? This is like a retest of this opening range here. Where's my sell alert? Sell. Think we missed it, guys. We might have missed it. Okay. And we can take a small risk on that. Okay, so this would be like a scalp, taking the retest of that area. All right, so this would be an example of a scalp. Let's see if we can get into this. Let's see if we can get into this trade here. might pull back, right? Maybe it pulls back to here, but at this point, we're starting that downward movement. We're starting that impulse. We're starting that impulse move down. And we'd be getting into this trade early here. We've got some support, some resistance levels up here that we could use. So we could actually pull this back. It might be too late. When we start to swing back up here. Oh, there we go. Okay. So we're making a little move. Where's this thing going to go? Let's see if we can capture the momentum here. Let's take TrendCloud off for a second. Let's see if we could, whoops. Let's take everything off the chart and recalculate this. Recalculate. TrendCloud. Okay. This is the candle that caused the TrendCloud signal. We were able to capture the retest of that. All right. Here's the ADR checkpoint. And now the question is, well, how much do we want to risk on this trade? Well, as you know, we never go over 200. We never go over 200. You know, how far back should you put this? It doesn't really matter. It's either going to work or it's not going to work. So, you know, you'll never know if this is going to pull back to here, to here. You don't know. It has to work right now. It has to work right now. If it doesn't, then you have to say, okay, do I want to take another shot at this? And, you know, that's a decision you have to make. If it breaks above all this structure here, then we have to assume it wants to go higher and you have to pick another spot. Okay. There is no way. I usually say, well, you know, give it the full length of the arrow, right? As you know, just because it's there. There's that TrendCloud arrow. So you could use that. We're under $200, right? We're under $200. That gives this a little bit of wiggle room, you know. If this goes, you know, breaks above all this structure here, then you have to say to yourself, okay, well, you know, then we're probably heading for, you know, back to that area. We're heading back to that area there. In which case, you would do this. Okay. You would do that, and you could set it up, you know, so you could set that up perfectly just like that. All right. You set it up perfectly just like that. So this looks good, right? We've got into the trade. Here's the ADR checkpoint. Put your ADR checkpoints on there. Put your ADR checkpoints on the chart. They make excellent targets, right? They make excellent targets. Where are we at with our cycle? All right. Whoa. Wow. How did we predict that? We do, what's going to happen here? It's like um, a momentum-based trading system will allow you to capture moves like that. Now, I want everybody to know what we did here. We started off on the 4-hour, 1-hour, 15-minute chart. We didn't see what we wanted to see, but we saw that this was definitely starting to move down. We had really good volume in copper, more so than gold. So we chose to go with copper on a trade. And what we did was, if you're just jumping into the room now, what we did was we turned our long-term time frames into more of a scalping system. And what we did was we put 5-minute, 15-minute, 45-minute. Each time frame is 3 times bigger. And we've got, on the on the high time frame, we've got our target here, right? There's the base of the candle right there. Okay, that's the base of the candle right there. That's what we want to hit. We've got an ADR checkpoint, just below that. ADR checkpoint just below that. And scalping is a little different. You really have to take those, you've got to take those shorter moves. On these time frames, though, take a look at what we've got. Take a look at what we've got on these time frames here. We've got downtrend, downtrend, which is what we want. Cycling down across multiple time frames. Crossing below negative 100. And momentum here on the high time frame is flashing between red and green, and that's what we're experiencing right now, right? Quite a reversal symbol. So on the shorter time frames, you can see how quickly this stuff moves, right? And how quickly it could go against you. So maybe when you scalp, you want to take 1-to-1. You want to take those quick trades. We've got everything on our side, though, right? We've got everything on our side. We've got another 40 seconds left. Let's see where this candle, if this candle closes, below all this structure here, well, we've got ourselves a nice situation. Got ourselves a nice little situation. And then maybe we want to take that, that shorter target. It's all about base hits, right, guys? All about base hits. All right, that's a very bullish candle that was just formed. That's a very bullish candle. So, what are you going to do? What are you going to do? Let it play out. Because this is such a bullish candle, if price decides that it wants to break past this candle, it's going to make that downward move even more powerful. Even if it does it in, the next 15 minutes or so. It's a 5-minute candle. So in the next 10 minutes, if it breaks through this very bullish looking candle here, we've got a great chance that it comes down and hits this ADR checkpoint. Okay. it's still a little too early. It's still a little too early to get risk-free on this. We did break through structure. We did break through structure here. So, you know, you've got to let it just play out. You can't rack your brains like, oh, should I take the $100 or whatever, you know. Even on the high time frame, look what we've achieved on the high time frame. Impulse down, pulls back into TrendCloud, breaks through structure. Correction back into TrendCloud, bounces off the 50, right? It goes as far as it's going to go. So we broke structure to the upside, and now we broke structure to the downside again. Good sign. You never know what's going to happen. You never know what's going to happen. So, you know, we saw an opportunity on that little 5-minute chart. All you can do is let it play out in the scalping world. But you can see how TrendCloud lined us up for the opportunity. We had resistance levels. We had levels of imbalance all on the chart. When we looked at our higher time frame, we saw we were cycling down in a downtrend. We had momentum on our side, cycling down on the high time frame in a downtrend with momentum on our side. Wow. What more information do you want? What more information do you want? Do you want the crystal ball? Are you looking for the crystal ball? You know, this is the math part. This is the statistic part, right? Oh, this is the statistic part, right? What's going to work? What's not going to work? What's the probability? What is the probability of success? Well, you've got the best probability of success when everything is lined up. And then all you can do is let it happen, right? Giving us a little trouble here. Maybe we take a little heat. We don't know, but we are set up. We are set up if it pulls back really deep. So we're just going to let this play out and we'll just talk our way through it. What did we pull into here? Okay. That's our ultimate goal, right? What do you think is going to happen? What do you think is going to happen if we break through this drop-based rally that broke through all this structure here? We're going to have a very powerful force to the downside, right? Pulled in, hit that zone. So we are getting a bit of a reaction. Where does this go back to? Look at how this demand zone, really nice looking demand zone, right? On these time frames that we're looking at, we pulled into this demand zone in a downtrend with downward momentum. So we've got trend and momentum on our side. Where does this pull back to? Pulls back into the trend cloud, right? Here's the next zone up here. Pulling into, right? This is a resistance level here. Pulling into that resistance level. And it's going to bounce back and forth between those areas. On the 45-minute chart, where's that resistance? It's right here, isn't it? It's right here at our 50 simple moving average, right? Right here. That's the 50 simple moving average on the 45-minute chart. And the last time it kind of broke through it and just went up into, went up into here. If we take the full 200, we're still right there. Your first loss is your best loss, right? Your first loss is your best loss. Why take the full 200, right? Here's TrendCloud. We don't want it to go past, we really don't want it to go past our 5-minute structure here. We don't want it to go past our 5-minute structure. We want the trade to work right now. We want the trade to work right now. We don't want it to go past our structure, because if it goes past here, the next level of resistance is, let's say, like this, right? That's the next level of resistance. And we really don't want it to go past our 5-minute structure, 5-minute resistance level, because we want the trade to work right now. And if it doesn't work right now, then momentum, trend, whatever, the forces of the universe, it's not ready. And therefore you have to choose the next point where you've got imbalance and you've got momentum and trend with you as you're pulling back into that supply zone. But we want this to work. We need this to work right now. And if it doesn't, it's okay, because we have the proper amount of risk set. We're under $200 risk. And we're set up for, a $500 reward. $150 risk, $537 reward, with trend and momentum on our side across multiple time frames. Whoops. That's how we play the game. That's how you use your TrendCloud. All right. If it doesn't work, we're set up for the next one. If that doesn't work, that's it. I don't want to be a part of it. Plain and simple. Plain and simple. I know it's 10 o'clock now, guys. It was a good hour. All right, a good hour. I'll hang out and we'll record this trade together. And we'll just record this and use it as a scalping lesson. We will use it as a scalping lesson. we really want to see everything break past this this demand zone here. Now, if I saw that sooner, here's your 1-to-1 right here. Right there's your 1-to-1 right there. This, you know, if we break through this demand zone, we've got a really good chance of hitting that ADR checkpoint. But we don't know. We don't know what's going to happen. You never know what's going to happen. You can only make observations and set the trade up and see if it works. That's it. That's all you can do. That's the level of uncertainty that you have to get used to. Again, engineers, designers, drafters, you know, mathematicians, programmers, they're very uncomfortable with that. So, you know, so what do? Do you get another, shot at this? Now, unfortunately, we only have one contract. We can't scale out of this position. If I had two contracts on here, you know, I would definitely scale out. I would definitely scale out of this. But I think the proper thing to do is once we hit 1-to-1, then, get risk-free. We really want to break some structure before we get risk-free. Things happen very quickly on these shorter time frames. Okay, it happens very quickly on these shorter time frames. 125. At this point in time, you can see momentum and trend on your side, right? Starting to hook down. We've got our first hook down on the 5-minute chart. What do we want to see? We want to see a double hook, maybe a triple hook. Make that move down, break through all this structure here. Okay, so this is a demand zone that we're pulling into this demand zone again. And we're at 1-to-1. So we hit our 1-to-1 again. We hit our 1-to-1 again. We need this to work. We need this to work right now. There's the new little demand zone there. How about we reduce our risk there? There we go. Nice. Okay, so now that's a very bearish candle. If we can break through, right? If this doesn't completely reverse, if we can break through this on this candle here, we've got a great chance of hitting that. We've got a great chance of hitting that ADR checkpoint. Okay, so where is it? Here, this is what we're looking at. So 15-minute chart. This is a 15-minute demand zone. Beautiful looking demand zone. Look at all the structure that this thing broke. Very powerful. But we're in a downtrend on the high time frame, cycling down, momentum down, and we're pulling into this demand zone. with a lot of downward momentum in a downtrend. So this is such a great lesson. This is such a great lesson. And I hope it works out because it would really follow our theory beautifully, how we don't like to take demand zones that have trend and momentum against you for this very specific reason why. So I'm hoping we could put our theory, put our theory to work and actually have it function properly and work. So this is an exact retest of that area. An exact retest of that area there. Hopefully we can survive this. We're above all of this structure here. See, we're above all this structure. It could very well pull back into this, right? See how TrendCloud is showing us? Nothing is exact, right? Nothing is exact. But it's showing us what it could pull back into. And so now at this point, I would say that $125, whatever. Let's see, where's the structure? Yeah, so we're above all of this, right? We're above all of this here. We reduced our risk, right? We're looking for that breakthrough. We're looking for that breakthrough. And we're discussing the theory, and again, things shift, right? Price shifts so quickly on the shorter time frames. So when you're scalping like this is a scalp trade. So when you're scalping like this, we're already at a little bit more with this risk. We're a little bit more than 1-to-1, aren't we? Maybe you just keep taking those little 1-to-1 trades. You just don't know if it's going to pull back again and give you another entry. We see potential. We see potential here for that big, move down on the higher time frame here, into this area. There's your ADR checkpoint. Oh, where's the opening range on this? Broke to the upside, bull trap, broke through the opening range. We're kind of retesting, right? So now we've actually got the retest area of the opening range right here. 150, 162. So this is a legitimate retest area on the opening range. So you see how we took our TrendCloud theory and applied it to a strategy. We took our TrendCloud theory or trade plan and we applied it to the opening range breakout strategy. Okay. We also took our TrendCloud trade plan and applied it to supply and demand zone selection. So we did two things today that got us into this trade, got us into the green. And now it's like, okay, what do we know about, the breakout of the opening range? We usually take the retest, right? Especially when we have trend and momentum on our side. You just never know how far back that pullback is going to take place. And all you can do is watch it play out. We really need to break through this bullish candle here. We really need to break through that bullish candle. When is it going to do that? We don't know when it's going to do that. We don't know. If you get bored with it, or like it's 10 o'clock, it's like, well, maybe we'll just close out in the green and, we'll go look for something else. Let's just take the 1-to-1. In theory, we have, we've got a retest going on here. Do we let that play out, or do we give it more wiggle room to do something crazy like whipsaw or something like that, And we're also coming towards the end of the month, right? We're up. Everything now is icing on the cake, isn't it? Towards the end of the month, everything is icing on the cake, right? We're up over. Let's go take a look here. Right, $2,662. If we close out right now, we're 2,700, right? Making a move up here. We're in the green for the month. So everything is icing on the cake, right? There's your TrendCloud resistance. Downtrend, 45-minute, cycling down, momentum's down. Momentum's on our side. Momentum's on our side. Taking some heat now. So we gave back that 1-to-1. To hold out for the longer move. I don't know what's going to happen. I don't know what's going to happen. 15-minute chart just created a new candle. Getting another 5-minute TrendCloud signal. Do you guys see that? There's the little little arrow forming there. Right there. Good sign. We are in the green, guys. We're in the green for the month. Let's see what we have here. As of, this is what's in the bank, right? 2,626.50. $2,626.50. %. We are up 13% for March. In February, we did 24%. All right, but we are up 13% for March. I know it's after 10 o'clock, guys. I'm just going to record the rest of this. Oh, it's okay if you got to go. I totally understand. I'm just going to hang out here, and I'm just going to hang out and record the rest of this trade, and I will post it for you guys in the live Facebook room. So thanks for hanging out with me today, everybody. And this is pretty interesting. This is a really good lesson in making sure that you've got trend and momentum across multiple time frames when you are taking your supply and demand zone. I'm wondering if we take, how many times do you think we'll end up taking, now that it's getting later in the day, how many times do you think we'll end up taking this and getting another shot? Very difficult decision. We really want to see that break of structure there. I think if we break through this, and I want to break through this structure and then move my stop loss. I want to break through this structure and then start to move my stop loss. I would move the stop loss down to 1-to-1 then. Yeah. I want to break through all of this and then move my stop loss to 1-to-1. That's what I want to do. Okay, so we formed a 5-minute TrendCloud candle signal. We need to break below that candle in order for it to be valid to the downside, right? In order to be valid. If we were going to enter this trade here, if we were going to enter this trade right now, that's right there. That is what would get us into the trade. It really wants to we're really in a fight between these two areas here. And again, with this scalping technique, you know, you're really in a scalping technique. It's so volatile. The moves take place so quickly. What a shame. Yep. We're just going to record the whole process. Every process that you record or take notes on is a lesson in risk management. And you have to, we are specialists. We are risk management specialists. And that's why we're successful. When you're a specialist in risk management, your chart looks like this, right? All right. So here we're about to get stopped out here. Okay. We're about to get stopped out here, in which case the next move is up here. But we're still up 13% on our, for the month. Okay. So we're up 13% for the month. We could give this, you know, a little bit more. We could give this a little bit more of, you know, of space where we originally had our stop loss up here. And then when we started making this move down, it was looking really good. But, you know, your first loss is always your best loss. And you put your stop loss above you know, resistance and structure. So your first loss is your best loss. The second move that we're going to take a shot at is this up here, right? And then that's it. You know, that's it. That's all it gave us. Eventually, I do think we'll break through, you know, we'll break through this. Okay. There's our next entry right there. Remember, we have trend and momentum on our side. We've got trend and momentum on our side. It just wasn't ready yet. This, you know, if we bring this down to the ADR checkpoint, that gives us an even bigger reward, doesn't it? That gives us an even bigger reward. So now in hindsight, we're saying to ourselves, well, we should have got out, you know, at that 1-to-1 and got risk-free. Well, yeah, but it didn't break through structure. You want to get risk-free when you start breaking through structure first. That's when you want to get risk-free. Hitting that previous day's close. Trying to choose a direction. And things are kind of slowing down now. So, I'm going to continue to record this, guys. It's almost 10:30, so I'm going to shut it down, and I'm going to continue to record this for you, and I'll post it in the live Facebook group. But I have a feeling that what we designed on this trade is going to take place. It's just going to take a little while, and rather than just watch a screen, gets kind of boring. So I will continue to manage this, and then I'll post everything in our live Facebook group. Okay, but when trend and momentum are on your side, if you get stopped out, you may have to take another shot at it. This is what it really looks like. Okay, so it's not that you made a mistake or anything or you did something wrong. The trade didn't work right now, which is what we want it to do. We want it to work right now. But we've all seen this. Stop you out, goes a little bit higher, you get back in, and then the trade works, right? So for everybody that didn't get back in, they were all kicking themselves saying, oh man, why didn't I get back in? And it made the bigger move, and I'm not a part of it, right? So it's not uncommon to take a couple of shots at a trade before it works. All right. And that is the moral of the story. All right, guys, I will see everybody tomorrow, and I'll finish managing up this trade, and I'll turn it into a lesson on risk management and post it for you guys in the newsletter. All right, everybody, take care. Good session.